This book is so good. I live by it. I love it.
You do not need to fear IRS audits. Do you report those short-term rentals in Schedule C or Schedule E? To not buy squarely for taxes. Taxes should be a cherry on top.
So making sure that you pass the STR tax loophole audit. All right, guys, we are finally at this final piece, which we've been teasing the entire time, which is the audit section. So making sure that you pass the STR tax loophole audit. And Brandon is going to go through a lot of additional little tips, tricks, and information that you need to know. But before we do, Brandon, I appreciate you giving all this information out and even figuring out the STR tax loophole in the first place. So really appreciate that. I guarantee a lot of people thank you for that. There are definitely people who are listening to this that want to work with you. And before we get into the audit information, can you just let people know where they can go to work with you, what they need to know, whatever you want to say, just let people know what they have to do to get a hold of you.
Yeah. So the best way to connect with us is just going to our website, which is www.therealestatecpa.com. And I would say anybody that is like if you're listening to this and you're like, I want to do this, then come hit us up. We want to work with people that are actively investing in real estate, or you're about to pull the trigger on your first rental, whether it's short-term or long-term. So typically it's people that are investing in real estate actively or about to start their investing career. Alternatively, we have also started to carve out a little niche that I've been referencing throughout, tax resolution support. So when you get audited, we have found a lot of people are contacting us now, which is great. And now we're starting to build out a bench of people to help on tax resolution, on tax audits, both IRS and state. So if you're getting audited, give us a call too, because we can help you shore up your defense and hopefully win or negotiate with the IRS some middle ground. You're not getting totally slapped with back taxes and penalties.
Beautiful. Appreciate that. Let's get into it. You just talked about you have this service. So obviously you do this a lot with other people. And I think this is really important to talk about because you mentioned this before in another conversation that we had, where if someone gets audited and they work with a different CPA and that person does not pass the audit test, right? The IRS will then go and look at that other person's clients to figure out if that other person will not pass the test either. Because usually if the CPA does something wrong with one client, they're going to do it wrong with all of their clients. And yeah. I think that is the greatest sales pitch ever to work with you, right? Because like that would scare the hell out of me, right? Because if one CPA has like 500 or 1,000 clients, and then one of them screws up, all the rest are screwed, right? And so, you obviously have a lot of clients, and you don't want one gets screwed over, they all get screwed over. And so you take this very, very, very seriously. To the point where you're even creating a service where you help other people who are getting screwed over by this, right? Yeah. Which I'm sure is booming at this point, considering that the audits have gone up by 2,000%, right? So it's a service that is without a doubt needed, but great reason for people to work with you. I loved that when you explained it the first time.
Yeah. And by the way, I just want to, I want to preface this entire conversation with, you do not need to fear the IRS. You do not need to fear IRS audits. And I really hope that this conversation does not turn into fear mongering, because that is not the intent.
Beautiful.
The intent, though, is to give you a dose of realism as to what can happen if you're not careful with how you treat your total tax situation. And so the thing that you were just talking about, John, back in I think it was 2018 or 2019, there was a small firm out in California that was claiming real estate professional status for literally every single one of their clients. And they were also setting up sham partnerships for every single one of their clients. And I only got clued into this because in like a week, we got like 4 clients that all had very similar situations. They were all physicians. And I looked at their returns, and they were all from the same provider, and they were all under audit. This is back in 2018, 2019. And when I did some digging, I realized that exactly what you described happened. The IRS essentially found, it's not just like, they made a mistake. It's, they were negligent in their advice. Like they were effectively fraudulent. And so if they were fraudulent with one client, let's go see if they were fraudulent with multiple clients. And when they confirmed that, the IRS is in this game. It's important to back up a little bit. So the IRS, the agents, how do agents get promotions and get good positive performance reviews? Well, it's all about production. Okay. And so production is essentially how much time did I put in and how much money did I extract? And so if I'm able to find a firm that is giving this fraudulent or very negligent advice, why would I go and continue to just play whack-a-mole with all of the potential taxpayers instead of just audit every single person that firm works with? That's a vein of gold. My production is going to crush. So that's the way that you have to think about these things. So what that means for you as a buyer is to, again, if you rewind back to when I said, look, like there's accountants that will just tell you what you want to hear, right? Everybody wants to hear that I can just listen to this whole webinar series and count all that time for real estate professional status and material. You want to hear that. Why? Because it's super simple. We always get questions of like, hey, I listen to your podcast every week while I'm commuting. Does that count for real estate professional status and material participation? The answer is no, it does not, because it's not actually helping the property collect rent or pay bills, right? You're just, you're educating yourself, which is important, but it's not operational. It's not tactical. So it's not going to count for material participation. But there are accountants that will literally tell you that stuff counts. And those are the accountants that are telling every one of their clients that stuff counts. And all it takes is a handful of these clients to get audited before you also get pulled into a not so random audit. So it's important as a buyer to understand kind of who you're getting into bed with from a tax service perspective, and just make sure that they treat the stuff really seriously. And they're not just telling you stuff just so that you pay them and come on board.
I almost feel bad for these people because the way that I relate to this is that I understand Airbnb data extremely well, to the point where when I see someone else try to explain it, I can poke holes left, right, and center. But the problem is that I don't have a massive audience. And so these people are seeing this influencer talk about how to analyze the data. And I'm just staring at this going, it's so wrong. And I have no way of getting a hold of these people and telling them they're wrong. Right. And so then all of a sudden and the problem, the reason I feel bad for these individuals is because they don't know the difference. Right. It's like, how do you tell the difference between a good heart surgeon and a bad heart surgeon? It's all track record, really. Right. But if you just were sitting in front of one guy and he's like, I'm a heart surgeon, you're like, okay, he's a heart surgeon. Right. Like, I'm going to use him. He's my local heart surgeon, let alone he's absolutely terrible at his job. Right. And the guy in the next city over is amazing, but you just don't know that. So it's upsetting. Right. So I feel bad in a sense.
Now, mind you, I would encourage you, John, to not feel so bad, because I think that you would be surprised at the population of people that actively choose the person that is giving bad advice, knowing that they're giving bad advice. Because we have a sales process just like any firm, and we'll get people every once in a while that will say, well, this person told me that I could do it this way, so I'm just gonna go work with them because they said that I could do it. Just because somebody tells you they can do it doesn't mean you can do it, right? So there are those people out there too. But yeah, I agree. There are people that get sucked into marketing funnels, and they do get swindled, and they don't realize they get swindled until some later point when they work with a more professional group, or they get that IRS audit and they go, what the heck? I thought that I was good.
Yeah. Well, let's try and educate these people on everything they need to be aware of. I'm thinking personally, like all this information about the audit, like what I need to be doing, is super helpful. We might want to also frame this in a way where if you're going to work with a CPA, what should you be looking out for? Right? Like what should you be asking them if you're wanting to take advantage of this? So I think it's kind of a 2-section video here.
Yeah. So first, let's start with like, why is this even important? Because over the past 5 years, we've never even talked about audits. So what's going on? The IRS funding is now being used to audit taxpayers. And so just for some hyperbole, I guess, between 2016 and 2023, we helped on maybe 10 audits between all of those years. Okay. And some of those were inbound, like I was just talking about. We ended up getting a few of those clients inbound, and we kind of helped them, but they were all toast because they had all set up these sham partnerships and they were not real estate pros. But we were able to like help them like avoid penalties and reasonable cause. Like even if you're toast, there's still something that you can do to reduce the pain. Okay. And that's one key about audits. And we only had like maybe 3 of our clients get audited during that entire time frame. Today, since probably December 2023, we have had anywhere between probably 2 to 3, and now it's probably about 8 to 10 people a month contacting us about IRS audits. Okay. And still we're only getting a couple of our clients like embedded in this. So part of and the reason I say it's hyperbole is part of it might just be that we've got so much good content out there that once people do get audited, they're now just finding us. So there is this marketing piece to it that I don't know how much of that's at play. But I will tell you that the audits are there's a lot more activity than we've ever experienced before, to the extent that we're now going to roll out an entire team in 2025 solely dedicated to this. So I think what's happening is the IRS has this extra funding, and so they're pulling more people for audits. But the interesting thing is that they have more agents now, but the agents don't really know what's going on. Pretty much every audit, so all of those that I just mentioned on a monthly basis, we come on board. If we can help them, we do. And if we don't, we tell them you might as well just settle as much as you can. But it's almost every single agent that we speak with, we have to educate on just real estate in general, just how Section 469 works, the non-passive, all this entire presentation we essentially give these agents. And interestingly, the agents are also really receptive, and they're also really thankful for our team to come in and kind of explain to them, here's how this stuff works and here's why we did it this way. So we've actually had a lot of success. We've won a lot of audits for clients. Our clients will face $250,000 in taxes and penalties, and we got them down to zero. We had one that was $270, and we got it down to $260. So it's great, right? But we spend a lot of time educating. That said, sometimes the agents just don't know. And so what do? They bubble it upstream to the national cost seg practice that the IRS has, or the national partnership practice that the IRS has. Those folks are legit. They know what they're doing, and they will make your audit process much harder. So the point is, the point of sharing all that is just to say, I think that we're seeing more audits come down the pipeline because the IRS has more funding and they want to give their agents more work. But interestingly, their agents don't really know what's going on related to real estate. And we have found most of the time we are educating and teaching agents how all of this works, which is great for our clients, also great for the agents, I guess, in their future audits as well.
Yeah,
yes.
Go ahead. No, go ahead.
Go ahead and ask your question. Yeah.
Even more important than ever is what I'm hearing, right? To really make sure we're doing this properly. So how does one ensure they're doing things properly? What are people getting audited for? What is popping up? And we've probably covered a bunch of these already, but let's just summarize it into, here are the things.
So here's what's triggering the audits. It's people with full-time jobs or W-2 business income, W-2 income or business income. And you also have a Schedule E property where you're passing losses through to your 1040. And you're offsetting that W-2 or business income. Okay. So it's even if you have a spouse that stay at home, it doesn't matter. What's triggering these audits is I've got a loss from my rentals that is being used to offset my active income. That's what's triggering these audits. Okay. And a lot of people are being triggered. And some people are like, well, is it only rich people, $1 million in earnings? No, it's actually 200 to 400K in earnings. That's really what they're hitting right now. And I know that there's this whole program or this promise that they weren't going to hit anybody less than 400K. And that's just not what we're seeing. So, so people with, 6-figure income that's using rental losses to offset that 6-figure income, that's what's triggering these audits. Now, when we get the audits, the first thing that we're doing, so we're going to verify a bunch of things on your tax return. You can do this too. You don't need us to go and do. We actually do it for free because it's really fast to just kind of do a quick run. So the things that we're going to verify, first, we're going to ask you for your closing disclosure for the rental property, right? We want to verify, do you actually own the property? One time we had somebody that didn't even own the property.
Such a silly thing to have to ask for.
Yeah. And that was actually something we didn't actually verify it at that point. And then later we were like, crap, man, what is this? That was a long time ago. But so we get the closing disclosure. Do you actually own the property? Second, did all the closing costs get reported correctly? It is shocking how many accountants will double count insurance in escrow. They'll capitalize your insurance to your building basis. They'll also deduct it on Schedule E, and it's all coming from your closing disclosure because they just don't know how to process through a closing disclosure. So we want to make sure that the closing disclosure is reported correctly. But then we're going to start asking you about the material participation piece. All right, so you've got this big tax loss. Were you real estate pro, or is this material participation on a short-term rental? Material participation on a short-term rental is what is a lot of these now. Okay, cool. Give us your Airbnb calendar or your VRBO calendar or just your rental calendar. We got to verify 7 days or less. And then we also want to verify that you materially participated in the property, right? So give us your time logs. We're looking for your calendar of your tenants, your time log, And then we're going to ask you for your cost segregation study. Now, where we see mistakes is my material participation time log is super general, right? Like, again, like big shopping trip. That was literally an entry. It's like, okay, the IRS is never going to accept something like that ever. They will tear that up. And the problem too is that when the IRS sees that when the agent sees that one entry, they're then going to scrutinize every other entry you have. So the idea when you present this information to an agent is you want to present a very thorough and very complete picture of what happened. And so you need detailed notes. You need to make sure that your time is entered as nuanced as possible. And we typically say to the 10th of an hour, right? So I spent 1.1 hours on this, not just one, not just two. I didn't spend 2 hours every Saturday for 50 weeks because that's not believable either, right? What do people do when they create these time logs? They go into Excel or they go into Google Sheets, they type 2 and then they just drag it down. And that is not a time log, right? A time log is I showed up at this property and I'm tracking my time and this is why. So we had a client that actually went through our tax planning. So if you go through our tax planning, you become a client. We actually go through all this with you, and then we hold you accountable to it. We will not take positions on people's tax returns unless you furnish to us a legitimate time log. We go through it, we challenge you on it, and we make sure that it's updated on at least an annual basis so that if we get caught 3 years down the road, we're not trying to scramble and like recreate a time log, which is a massive mistake that people make. So we won't take the positions unless you do your part of the job. But we had a client that went through our tax plannings a couple of years ago, got audited, got their audit notice, I think it was April of this year, and went through the whole thing. And it was basically like $300K that the IRS made the adjustment. They said, no, we don't believe you. So we're stripping all that depreciation back and you owe us $300K in back taxes, penalties, and interest. And we were like, what the heck, man, this person's a shoo-in. But when we furnished the time log, they had actually used Toggle, Toggl. One of our few clients, I think, to actually use a legitimate time tracker tool. That thing was so detailed. The agent like looked at it for, it was a very short amount of time. We'd say internally like 10 minutes because that's what it felt like. But the agent came back, was like, this was so thorough. Thank you guys so much for doing such a great job. Completely reversed the change. Wow. It was a zero change audit, no issue. So it was awesome. Wow. Right. But that person took the time log piece so seriously. Yeah. And that's just a mistake that we see is people just not taking that time log seriously. So you have to be able to furnish a time log, very detailed, not generalized time entries, not generalized notes. You really need specific time entries, specific notes, and don't inflate your time. I mean, these people that are auditing you, the agents that are auditing you are people. They have real life experiences. So if you try to tell them that it spent, it took me an hour, to email John this morning. I was late to our recording session, right? Because I was doing a walkthrough at a kindergarten for my 5-year-old who's going to join kindergarten here shortly. So we're exploring new schools. Well, I emailed John, or I even had my EA email John, right? So it's like, okay, if I told the IRS that I spent an hour doing that, they're not going to buy it because they're real people too, right? They're like, how much did it really take you that time? But you'd be shocked. People try to do that all the time. So, so that's probably the biggest mistake that we see is just a really bad time log. We also see the mistake of people claiming the short-term rental loophole, but then when they give us their tenant calendar, the average period of customer use is like 7.1 days. You don't get to round down. Okay. If you're above 7, you're out. It's 7 days or less. You get 7.0 or less. And then probably the third mistake that we see is just really bad cost seg studies. And when I say really bad cost seg studies, what I mean is a lot of people use like ELB, KBKG, or CSSIs, like really like software based, and that's actually fine. However, when you get audited, the IRS is going to challenge it hard. And so now what we do when we go into the audits, we have contacts at all these companies. We reach out to them. We say, we need the legit full study. That's what we're going to give to the IRS. It needs to basically align with the study that you originally gave them. So whatever's on the back end, we need that. So if you go into these meetings, and it's the first meeting is very important because it sets the tone. If you go into that meeting and you're all jumbled and you don't have your ducks in a row, and you're going to give them, like we recently saw a CSSI cost seg study that was 2 pages of just really summary information, zero support as to how anything was arrived at. So we're reaching out to them to get all the back end information, which they will provide. But a lot of people will go into these audits and give the auditor the 2-page report, right? And what does the auditor do? They go, well, I don't know how to look at this, so I'm going to kick it up to the national cost seg practice. And the national cost seg practice is going to go, absolutely not, nail them, right?
Right.
So you want to be able to present really solid, really thorough information on the first meeting, and you want to do it in a way that supports you without, like, we're not being mean, we're not being overbearing, we're being very empathetic and collaborative with the agent. And that's something that people get wrong, I think, but we're presenting it in a way that definitely supports our positions. We're not going to expose ourselves to potential issues. And I can talk about that too, but
yeah, I was gonna say that all makes a ridiculous amount of sense to me, especially when you frame it in that way where you're trying to work with the agent rather than like against them. They're not interrogating you, they're just doing their job, and their job is, hey, you know, I work for the government, and you said to the government, I want these tax losses because of these reasons. And then they're going to go, we didn't check that, we just gave it to you, but we're going to do a spot check, and you just happen to be one of those people we're checking. And I just want to confirm, prove to me like that this is legit. Prove to me that everything lines up, right? And if it all lines up, great, good to go, right? And I've done my job, I've done the check, and we're good to go. I'm not looking for if you followed all the rules, right? That's not who I'm looking for. I'm looking for the guy who's screwing everyone over. Now, if you're following all the rules, there should be no issues here, right?
Yeah. Because remember, how is an IRS agent analyzed performance-wise? They have a job just like you have a job, right?
Yeah.
Their performance is how many hours did you put in and how many dollars did you get out? So if they're putting in all these hours for somebody that has very thorough documentation, very good answers for every position, very good support, they're going to move on to the next person because they're going to catch somebody that has no support, and they're going to be able to extract a lot of money out of them in terms of taxes and back and penalties, right?
That's a good way to think about it as well, right? If I'm that agent, and my job and my salary and my livelihood is based off of finding the people who are doing the bad things, if I see somebody who's doing the good stuff and I see like 80% of what I'm looking at is all good, you know what I mean? Like in that very quick check that you're kind of explaining with the guy who's using Toggle, I'm going to go, okay, well, this is going to be a waste of time, right? I got to move on if I want to keep my job. And so then they go, okay, I got to go. Right. And you're going to go, see you later. That's how the way you're framing it, that's how I would understand it. So
your understanding is correct. Okay. Yeah. Now, where people really mess up is, again, that first meeting, really important to get right. You want to go in well prepared. You typically want to go in with printed documents, not your laptop, because you don't necessarily want to be pressured into opening your laptop and starting to click through things digitally. You want to control the conversation. Okay. So you want to go with printed information. We Zoom with all of our clients. So they'll set us up on the table and Zoom, and then we'll talk on behalf of our clients because you don't want to say the wrong thing. And what I mean is, again, these agents aren't the agents that we've been experiencing this year. Not to say that they'll always be like this. They're learning as they go. It's kind of like putting duct tape on the plane as they're flying it. And so you don't want to use language that tips them off to something. For example, if you have multiple short-term rentals, you can more easily hit the material participation tests if you make a grouping election to group all of the rentals together for the purposes of testing material participation. If you don't make the grouping election, you have to prove that you materially participated in each rental separately. So if I have 10 short-term rentals, then I have to hit the 100-hour test and more than anyone else in each rental separately, all 10 rentals separately, which is obviously going to be much harder to do than if I just grouped them all together into one and I materially participated in the one total activity, right? So if you show up to the audit and you didn't make the grouping election and you have 10 rentals and then your CPA says the word group and then the auditor goes, oh yeah, did you make the grouping election? You just shot yourself in the foot, right? So you have to make sure that your accountant, and this is all like, we do this very thorough analysis. We go back multiple years to try to figure out, okay, when we go into this meeting, what are the words that we're not going to use? Because we don't want the auditor to go, oh, thanks for reminding me. Can you also give me that documentation? Well, I don't have it because my accountant never did it, right? We
Right.
run into that grouping election quite often. We also ran into one recently where the taxpayer took all the depreciation in a year, but didn't actually acquire the property in that year. They acquired it in a prior year. So kind of what I was talking about, where you can time your depreciation if you want to, and
Yeah.
it's great. It's an awesome tool. However, you have to file Form 3115, and you have to make a 481A adjustment. And that is a complex form. And this taxpayer, their accountant just didn't do that. They just deducted all the depreciation. Luckily, we recognized that, and so we avoided that conversation entirely. but you have to be really careful, because if it's like, oh yeah, like we put it in service, but it's fine. Like this year we materially participated. Or not like, oh yeah, we accelerated all the depreciation into this year because
Right.
we were, we'd missed it that year. It's, oh, you missed the depreciation. Wait, there's a form. Wait, did you file a form 3150? So it's just being really careful with the language that you use. And sometimes like we'll have somebody contacting us and we won't have a chance to get the POA. You have to get a power of attorney to have your accountant, CPA or EA or tax attorney represent you in front of the IRS. And so if you contact us and your meeting with the IRS is like tomorrow, we're not going to be able to get the POA processed, sent to the IRS in order to represent you tomorrow. But we can sit on the phone and type to you on the back end. And every once in a while we do this, and the CPA representing them just like says the word group, and they didn't make the grouping election. They use the language that trips the IRS up and makes them go down a new rabbit hole.
Right.
So part of the art to audits is keeping the scope very narrow. And you do that by being careful with the language that you use. And so we've just learned along the way that like not all accountants are very good at this.
Right.
They don't go in with a strategy in that first meeting.
This is why I really enjoy having conversations with you about this stuff, because you go into these nuances that are very insightful and logical, and I can see where you're coming from and why they're important and why people need to know them, and their actual experiences that you've gone through. It's just all so well thought out, and you're likely so well thought out because you just had to go through it so many times, right? You've seen all these different scenarios. What do we do? What do we not do? What is mistakes? All these different, we could talk about a lot of different situations, and you've just been through a lot since you've got this up and going. So this is all extraordinarily helpful when you're going through all this. Is there anything that I'm missing when it comes to the audits in the way that you're explaining it that anybody else should know? I think you covered a lot of great stuff here.
I think that's just, when you get audited, don't panic. Even if you're toast, even if you took a position that you should not have taken, you will owe back taxes, but you can typically negotiate on the penalties. You can typically remove the penalties. So it's not like, it stinks, don't get me wrong, but it's not the end of the world. So don't panic, but make sure that you find a group that has experience with it, is actively doing it, is professional, and is really going to meet with you prior to that first meeting to set you up for success. So it's not, again, I think more audits are going to come down the pipe. Don't panic, but just make sure that you're working with a strong group, and you'll probably get the best result that you can get.
I was going to say, now that's good for when you're going to be running into an audit scenario. But what if we take it a step further back, which we kind of talked about, and we go, what questions do we ask a CPA while we're interviewing them if they should be our CPA? Is there anything that sort of stands out?
Before I do that, I want to summarize the key things that you should look out for, that if you look at on your return every year, can help you win audits.
Okay.
So the first things are your closing disclosure. All those costs, were they put into the right buckets on your tax return? So there's Schedule E, where you deduct insurance and taxes, but you can't deduct escrow, right? So a lot of us prepay taxes in escrow, or taxes and insurance into escrow. That's not a Schedule E line item, right? So that should not show up on Schedule E. Schedule E, right? And then everybody should have a depreciation schedule that shows like my building basis, my land basis, and my loan costs. Are all of those right? So make sure that that's right. You also want to make sure that when you look at your tenant calendar, it truly is 7.0 days or less on average. You want to make sure that your time log is fully filled out. So dates, what you did, what property you worked on, how much time it spent. Be very specific and very accurate with it. The more thorough, the easier of a time you will have if you eventually get pulled for an audit. And then the last thing, just on an annual basis, is to make sure that you always get a more detailed cost seg study. So if you're using like ELB, KBKG, or CSSI, and they're giving you the 2-page summary version, just ask them for the detail version as well, and that will make your life easier for an audit. The last 2 major points are just if you have multiple short-term rentals, you're probably looking at a grouping election. Make sure that you have your conversation with your CPA about a grouping election. You don't have to necessarily know more than that at this point, but just if you have multiple short-term rentals, ask your CPA about a grouping election, okay? Yeah. And get proof that it was made. Don't just have the conversation. Get proof that it's actually in the tax return, because that's another issue. And then the last piece is if you bought the property in a prior year, then the year that you're taking all the depreciation, make sure your accountant files Form 3115 with a 481A adjustment. Make sure that happens. You have to make sure that happens. So that's like the summary of the IRS audit issues. Now, to your question about how do you know, like, what questions do you ask a CPA? Man, I've actually like wrestled with this.
So I just, as you're saying all that, I was thinking to myself, what if you were to ask your CPA one simple question, and it would be a question that if they didn't have the right knowledge, they would get it wrong. And then you would know, okay, I should avoid this CPA. And that's what you were saying earlier, is that you tell people what they should hear rather than what they want to hear, right? So what if the question was something along lines of like, hey, I want to do the STR tax loophole, and I want, to be able to work with you to make this happen. If I were to be listening to a podcast that talks about the short-term rental tax loophole, can I use that as part of my material participation hours? And based off of what the CPA says, if they say yes, then you know to avoid them. If they say no, then you're like, okay, they actually understand what's going on here. That's part of it. Obviously, they could just directly work with you, and it'd be a lot easier, right, than having to go find these other CPAs. But
well, let's kind of brainstorm this a little bit, because this is always something I've struggled with. I used to say, hey, ask your CPA or ask your potential CPA how many real estate investors that they work with. But again, it's just something where, like, if I'm an accountant, I really need money and I need your business, I'll just say what you want to hear, right? So there's no real like proof there. I think that so let me say like just kind of like general stuff, and then we can get into the couple technical things that you could probably ask to kind of gauge. I think in general, if you go to their website and they don't talk about real estate, or they don't talk heavily about real estate, you should probably avoid them. Like if you go to my website, realestatecpa.com, I mean, it's Real Estate CPA is the domain name. My website is all about real estate investors. Okay. So you go to my website and you could probably have a little bit more confidence that we work with a ton of real estate investors, and we don't work with a ton of like people that, are restaurant entrepreneurs.
Can I actually jump in real quick on this? So
sure.
I have a rule where I don't order a steak unless I'm at a steakhouse. Right?
There you go.
Because it's going to be, it's kind of a waste of money. So if I'm going to order a steak, it's going to be from a steakhouse because they're going to do it right. If I'm going to get a CPA and I'm focusing on real estate, go to the real estate CPA. Just makes sense.
Yeah. So that's like a general thing. Another general tip is to go, build your CPA interviews based on referrals. So look around online, hit your local real estate meetup up. If you know any real estate investors, ask them who they're using. Not to say that it's going to prevent you from using not good CPAs, because again, like we're now getting audits from accountants that claim to be real estate focused accountants, and they're not good. So it's again, not to say that it's going to prevent, but I think it helps reduce some risk if other real estate investors are using that accountant. So I think this is just kind of like some general things. You can also look around like online for, have they produced any sort of thought leadership? There's a lot of firms that like run podcasts, write a lot of blogs, host webinars. So you can join those. You can join them live and kind of see what their technical knowledge looks like and how they make you feel. But before we get into the technical piece, I do think that the major, sometimes people will ask us like, well, what questions am I not asking you that other people ask you? Most people do not ask about the actual experience that they should be expecting. So most people, it's just like, yeah, I'm leaving my other accountant because of this reason. I just want to make sure I'm working with a good group. How do you bill, etc. But they don't actually ask like, well, if I send you an email, when should I expect a response? How many times a year are we meeting, and what's the purpose of those meetings? Can I lever up? What if I want unlimited access? What does that look like? Right. So I think it's kind of changed the way that I buy running my own firm. Like when I talk to other vendors, I spend more time on the actual experience and the support aspect rather than the technical piece, And that's primarily because I do a lot of the research and I look for referrals before I even talk to them. So I've kind of already like pre-qualified my vendors in terms of the capability to support me. And now I want to confirm some expectations related to client experience. I really think that if you did more of that, you would end up not working with groups that like surprise you on 415 with, you haven't heard from them in 6 weeks after you uploaded your documentation. It's 415. You got to run down to the post office and mail off $100,000 check. I think if you ask more questions about the experience, you would kind of be able to narrow it down based on that. So just think of what you can do there.
That's I love all that. I relate to it so much. Just with what we do, right? We're not a CPA firm whatsoever, but we are a data firm specifically focused on short-term rentals. And I always tell people, ask our competitors what their data process is. And if they can't give you a really thorough answer, come back to us. I have a 40-hour long course that teaches you my exact process. And you can go through it if you want to believe it or not, right? And that alone there is validation. But the next piece that you just said there, which is like, what is the experience actually like? That's the piece that we have been constantly trying to continually improve, right? Like we've been continually trying to improve it, because the better we can make that experience while also being really good at what we do and credible and have integrity and all these different things, it just leads to a better experience, and then it creates better referrals and everyone's happier and you have a better business, you got better clients. It's a really nice place to be. So yeah, fully agree with you on all of that. I think as for like the technical question that we were just going to potentially brainstorm, do you want to brainstorm, or do you feel like the one I kind of came up with was good enough?
Well, I think the one that you came up was great. And I was thinking about one other one while you were talking, and it was related to, so you were talking about material participation, just kind of challenging on, does this accountant know what hours count and don't count, right? And I think that's a really important, think about some other questions that you could potentially ask there, education hours, research hours. Do they know the difference between investor level time? Hey, if I do the bookkeeping, but I have a property manager, does my bookkeeping time count? If your accountant says yes, maybe a red flag, right?
Yeah.
So I think that's great in terms of those nuances. I would say the one other specific to short-term rentals nuance that I might ask is just like an open-ended, hey, when you have investors that have short-term rentals, do you report those short-term rentals in Schedule C or Schedule E?
I was just thinking that one too.
Yeah, and then whatever they say, even if it's the answer you want to hear, ask them why, okay? Because they could say Schedule E, and you could go, great, that's the answer I was looking here. But they could also say Schedule E, and you could say why, and they could say, well, because it's a rental under Section 469, which is not correct. The answer to the why needs to be because Section 1402A says rental income is not subject to self-employment tax unless you're a real estate dealer. Are you a real estate dealer, Mr. Prospective Client or Mrs. Prospective Client? No? Okay, then Schedule E, right? So that's the answer you're looking for, is 1402A specifically. If you don't get that, red flag.
Yeah. Cool. I think just those couple of questions that we just asked there would be a great way to validate. With all that being said, guys, just go work with Brandon. I mean, if you listen to all of this all the way through, why are you interviewing a different CPA? We just want to make sure that you guys have the option to be able to work or help or, with anybody else that's out there. Obviously, Brandon, this is like the best combination for me and myself to have you provide all this information, because we help people find properties. A lot of their motivations are taxes. But one thing that you said the last time we talked, which is extraordinarily important, is do not just buy a short-term rental for the taxes, right? That is the cherry on top. I just talked to a lady who bought a property in Joshua Tree for nearly $500,000, and it will make like maybe $40,000 a year, which to me is like the worst case scenario, because it's going to lose money. She'll save some taxes, but she'll lose more over the next couple of years. She'll have to sell the property. She'll have to 1031 exchange something, just in a terrible situation, right? Where I told her, I'm like, please never buy a property just for the tax savings. If you're going to go buy another one, reach out to me. I'll help you find that next property, because that's what I do better than anything, right? So,
I mean, don't get me wrong. Like, I would love to sell you all my tax services, but at the end of the day, like I said, we're real estate investors too. If you're just buying for tax savings, that's insane. But a lot of people do. Yep. And you know what? They overpay for property. They don't understand how depreciation actually works, because we've been talking about depreciation and using it to offset your active income. And it's a phenomenal tool, right? And you can always kick the can down the road, because you can 1031 exchange and you could die and pass it on to your heirs and they get a stepped up basis. There's a whole strategy with it. But also, you could buy a short-term rental in, say, what is it, Tennessee? It's not Gatlinburg. Yeah. That's a Smoky Mountains type of area. Yeah. So we've seen people buying in the Smokies, and they've like West Coast people buying in the Smokies, just lots of money, and they're just looking
Dumping
to
it.
burn it
Yeah.
for tax savings.
Yep.
Yeah, we saw this a lot in 2021 and 2022. But then what happened in 2023 and 2024, post COVID, once all the stimulus money ran out, once demand for travel normalized, those properties didn't produce as well.
Yep.
And so they started looking to sell. But it might be a situation where you bought it for like 800 and you're going to go sell it for 800. I mean, let's just start with that situation. Most of the time, anybody listening would be, okay, if I bought it for 800 and I sold it for 800, I broke even. But your really annoying accountant is going to say, yeah, but how much did you depreciate the property? And if you took bonus depreciation on the property, then your adjusted basis is probably like 650K. So you bought it for 800, you're going to sell it for 800, but you have a gain of 150 because the gain is calculated by the sales price minus the adjusted basis. And in that same situation, if I bought it for 800 and I sold it for 700, most people might go, oh yeah, we lost 100K. Cool. We get to use that loss. But again, your annoying accountant, hey, how much did you bonus depreciate the property? If your answer is 150K, I bought it for 800, I depreciated 150K, then my basis is 650. If I sell it for 700, I have a $50,000 gain, even though I lost my you-know-what on this property. I have a gain, a taxable gain. So it's just really important to not buy squarely for taxes. Taxes should be a cherry on top.
Couldn't agree more. That scenario I love how you say annoying accountant, because to me that would be like the greatest thing to possibly hear, to be like, oh yeah, that is what I should know, right? Especially prior to actually getting into buying a property. It's one of the reasons why we do what we do, why we have a service that we have, right? Because some people need that additional help to be able to find the properties that are going to cash flow well, rather than losing money and then you have to sell them and you're taking the depreciation. There's a lot of complications to it. And a lot of people, unfortunately, are in that exact situation right now. I mean, the lady that I just talked to, I do not see Joshua Tree going up in price over the next 2, 3, 4 years, maybe a little bit, but not the same rate it did before. The property sold in the early 2000s for like 30,000, and now it sold for 500,000. Actually, and the person who bought it back in 2021 bought it for like 475, and they just sold it for 430. It was up for 500. She ended up actually getting it for 430. I was just rounding up to 500 there, just to make those numbers make sense in case anyone's following that. Before we hop off, I gotta ask you one question. Have you ever read the book Fountainhead by Ayn Rand? Okay, so it's one of my favorite books. It's my second favorite book that's out there, and it's an entire story about integrity and how integrity plays out if you have it or don't have it between two individuals over an entire lifetime, and how that can affect your life, and how great it could be at the beginning because of the cash grab if you have no integrity, but what it really looks like at the end of life by really being true to integrity. It is hands down my favorite book. Ayn Rand, she also wrote Atlas Shrugged. Yep. And so this is one of her other more popular books. And this book is so good. I live by it. I love it to death. And it's a story, right? So it's told about these two individuals and how it goes all the way through. And it's just so easy to read, but it has such a powerful message. And the reason I'm explaining this is because I've tried to live with integrity, but at the same time, I've also tried to align myself align myself with people who have integrity. And that's why I wanted to do this mini course with you, because I feel like from everything that you have said, every single nuance you said, even to the point where it's like we tell our clients what they don't want to hear. It's like, yeah, we show our clients true underwriting that is not that sexy, but it's real, right? And so then you're in that same situation. So I just want to say thank you for having integrity. Thank you for dedicating yourself to what you're doing and actually being good at what you're doing, being true to the clients that you were working with, because there are so many people screwing people over left, right, and center. And the fact that you are actually trying your hardest and putting all this time and effort. I mean, we've gone for almost 3 hours now just on this information, just for whoever is going to end up watching it, right? So I appreciate that more than you know.
I appreciate that. I'm going to check out that book, Fountainhead. If anybody's listening, I don't think that this was intended to be like a big ad for my firm or anything. And I will also say that if you join us, and we don't always get the client experience right? I think that we do a pretty darn good job, but we don't always get it right. But I will tell you that my promise is we always try to get it right or try to fix it every single time. So, and we've made some interesting mistakes over the years, but we always correct them with the clients, and we tend to keep the clients as well. So that's my promise. So it's not like, come pay us thousands of dollars for marketing and then good luck on your audit and never talk to you again. There are people out there that are doing that right now.
Mm-hmm.
So that's why I'm just like very anti TikTok gurus at this point.
Yep.
Yeah,
Totally
but
agree.
we'd love to work with you if you're interested. If you're experiencing an audit, call us up. We're happy to help. We've got good experience now. And if you're investing in short-term rentals, we can absolutely help you optimize that.
Beautiful. I appreciate you, man. And everyone listening, hire us first. We'll find you a great cash flowing property, and then we'll send you right over to Brandon Hall, and Brandon will take care of all of your taxes. So
Thanks,
it's a
John.
perfect combination, really, if you ask me. Appreciate you, man. This has been great. Thank you for doing this. I know everyone else appreciates it as well. If you guys made it to the end, like, comment, let everyone know that you are really happy that you're able to hear all this. And obviously we have Brandon's link in the description down below if you're going through this. So once again, appreciate you, man.